All right, kicking it off here for the S&P 500. Actually, let me go over there here real quick. So for Friday, it was relatively slow, which is not surprising. There were two good setups I'll go over here, both in the Dow Jones and in the Nasdaq. But starting off with S&P 500, what we're looking for going in next week, because today there weren't any good trades for it, but what we're looking going in for next week is we have a potential long setup. So here you have the first point, second point, higher high three. So what we need is the price right here to go down, close below this black line right here. That's the second point of it. Once it doesn't, doesn't have to close, it just has to go below it, even if it's a wick. And then what we need after that is for price to rebound and then close above the pitchfork right there, that green line. So depending what it looks like and everything like that, we'll see how it goes. But as of right now, that is the only trade setup I'm looking for going into Monday for the S&P 500. Obviously, that will change as the price goes on for it, but that is what I'm looking for it. So not a whole lot to report for it today, compared to the last 2 days. You see the previous 2 days before Friday, it was just nothing but up and down sideways action, which is great for this type of trading. Today is a little bit more of a trend type for it, but yeah, that's the S&P 500. Going into the Russell 2000, we are there. So there's a potential trade setup right here. This is another one that has a lot better potential than the S&P 500 because we already have the 4 points established right here. There's first, second, third, lower low, higher high, fourth point right there. So it looked like on Friday, when it was screaming down here, it looked like it was going to close below it, and that'd give us a nice short trade right here. But as you can see, that did not happen for it, and then price just waffled around and didn't give us anything that we can use. So going into Monday, that is what we are looking at right now. Hopefully we get a down day, price closes below it. What I would love to see is for price to close below it, below this candle right here. And the reason why is if the price closes, let me put the fibs on. If the price closes like, say, well, that's 10 p.m. Sunday night. I don't know. Say it happens, whatever. It probably won't happen there, but it's just for example. Say it closes there. Well, then it's already in the 50% trade setup because this low right here would be higher. Let me put a little mark on there. Would be higher than that low right there. So because of that, that means it's already in the trade. That low that's already established would be higher than that low when it broke it. So unfortunately, we would already be assuming these highs hold right here. Let me just put another line on. Assuming these highs hold right here, it doesn't go up and hit and break this high. It doesn't go up and break this high. If it does go up, then that would change where we put the Fibonacci, the high point of the Fibonacci level. So if this high stays right here and price goes below, closes down over here, it would already be in the move and probably pretty close to being done because once it hits the 50%, then the exit is the hard exit is the lowest close of the move, which is right there. I always have my exit a little bit higher than it, but that's where that'd be right there. So that's the main one we're looking at for the Russell 2000 going into Monday. For the Dow Jones right here, there's actually a better setup to get in than when I got in because again, here's the first point, second point, low, low, third, high, high, fourth. So then as you can see, price came down, closed below it right here, and then we still had another lows all the way down to right here, then hit the 23.6, which puts the exit down to the 1.146 right there. But then once it hits the 50, we move it up to the lowest close of the move, which is right there. And so whenever the market closes, it kicks off all of my any entries I have waiting to get in, and then my exit. So my exit's going to be, I'll put the black line on there. My exit will be somewhere probably like right around there. Like I said, I never have my exit just right on the hard exit for it. I just always get out a little bit sooner, just ensure I get filled. And there's sometimes when price goes down, it'll hit it, tick it, and then reverse back up, and I can get in again. So when that happens, that's great. But the biggest thing is, book in 90% of the profit. Don't worry about getting the 95, 98%. Don't worry about the last 10%. Just that's the way I trade. I just try to make sure that my exit is close to the hard exit and my entries are close to the hard entry, and then therefore I know because sometimes if it came down to like one tick away or two ticks away, something like that. Like say it came down right there, I'd consider that complete. I mean, that is close enough for it to be going down there. So that's why I have my stuff a little bit higher than it, not on the main exit. But anyways, so then yeah, price to the 50s, so that moved it. And then if price goes up here near the 1.146 right here at 42,697, then we move the exit up to the 23.6, which is going to be the top of that green box right there, 23.6 Fibonacci retracement line. And we'll look for price to come back down. So I'll have two contracts waiting up here Sunday. Shoot, I don't know if will I be home that time? I'm not sure. Well, that would stink if I'm not. But I won't be home. Crap. Oh well. Just have to deal with it. And then so if price goes up there and hits it, hopefully he'll stay up there by the time I get home, and I'll be able to add two more contracts to it, and I'll have my exit right around here, about 42,380ish, something like that. Then I'd have another short, just one contract right up here, and then just leave it. I wouldn't take any more for it as well, but that's what we're looking for going into Monday. We are looking for a downward move to right here, and it doesn't mean that Monday is going to be a complete down day, but we are expecting at least that move down to go down and hit that, and then we'll just have to see what the market does after that. But that's the current trade that we're in right now, that short setup in the Dow Jones. Going over to oil, let's see here, what do I have that? Oh, I have this on there just because basically the market can only move three ways. It can move up, it can move down, let's see here, down like that, or it can be in a consolidation phase. And so let's see, I think I was showing someone that. So I'll just explain it here real quick. So right now, obviously, and again, drawing trend lines, I don't trade off the trend lines. They are very subjective, but they help. It's kind of like trend lines are kind of like the painting picture of a painting. They give it the framework of what's inside of it, but they're not the main part of it. So that's how I use trend lines. So as you can see right here, we're definitely in an uptrend for what it is right here. And then coming out of the uptrend, you always have a type of consolidation. This could be the beginning of consolidation. We just won't know right away. So that could be the beginning of the consolidation phase, or it could just be working its way down to the lower end of the trend line and moving back up again. Although it's only hit that part once, but that doesn't really mean anything. I mean, it could be even like right up there, although that kind of broke out a lot for it. So we'll just leave it. It could be that one right there. That one could be it, where it hit that high and then hit it right there. So anyways, like I said, they are subjective. They are subjected to it. But once price makes a consolidation pattern right there, then only two things can happen from that. Either the market continues its climb up, it makes another trend channel up, or it moves down. And so let's just say, for instance, in this example, the market moves back down. Well, then from there, from that down move, it's going to create a consolidation area, and then from there, it can only go two ways, either up or down. So that's the way I view the market right there. The market can only be in three different patterns. Right now, it is in an uptrend with the potential of, see the sideways action right here, of maybe starting a consolidation area, and the market has decided what it's going to do. But as of right now, we don't know. I mean, look at this one. This looked like it could have been a consolidation area, which it was, a small consolidation area, but it was just a small consolidation area within the overall trend. So that's just until this trend channel really breaks, then it's still in an uptrend for it before the consolidation. But anyways, let's get this off of here. So yeah, going into oil right here, we have a potential trade setup that we're waiting on. Friday, there wasn't any real action to do for it. Compared to the other days, this is a huge up week for oil. I mean, look at it. It started at the low point is at 66. High point went up to 70, almost 75, 60. So I mean, from the low, it was almost like, $9 going up, ended at 74.45. So huge week in oil. So what we're waiting for right here, there's first point, second point, higher point third. So we're waiting for a lower point fourth. So what we need it to do, we need price just to breach this black line right here, and that would get us in looking for a move going up to close above the green trend line right there, and then would look to go long in oil, put the Fibonacci move on it right there, because assuming the breakout trade, which hardly ever works, get the Fibonacci's ready to get in that trade. So that's what we're looking for oil. We'd like to see, or I'd like to see, a move down going into next week, break that black line right there. And then from there, that would establish the 4th point. And then from there, like to see price go up, close above the green line, and we could get in that trade going long for it right there. Nasdaq, this was by far the best trade on Friday. There were only 2 trades I was in. This was one of them that got finished right before I took the exit. What time did I take it? 2:35, because this was the hard exit right here for it, and so I just went ahead and got out. It's hitting the middle trend line right there. I just went ahead and booked the profit. But as you can see, price did tick up and bounce off the exit, because it's just the close of it right there. And so I'll show you how it looked. So what we have, we're using these 4 points right here: 0, 1, higher high 3, lower low 4. So then once that happens, we're just looking for a close above it, above this green line. We got it right here. Let's move this box away from it a little bit. So we got it right here. So then what we do is we draw it from the low, the lowest point, up to the high, and we look for the pullback, and there is the pullback right there. The 23.6 hit that. So when that happens, it locks it in that we're in the Fibonacci setup trades. And so the first exit is the 1.146, but price continued to go down, hit the 50%. So then when that happens, we move the exit down to the highest close outside of the trend line, or outside of the pitchfork, which is that bar. Zoom in a little bit, which is this bar right here. So that's going to be the hard exit, but like I said, I always have my exits lower. So I think my original exit was like right down here, but then I just took it out right there. It was almost the weekend. And so yeah, got initially up here because the initial trade is when it breaks out, is the exit is all the way up here, this yellow line. So if you can catch one of those, which I did get one in oil last week. I didn't take it up all the way. I probably took it up maybe 60% or so, and then actually did have a pullback, but that's why I get in right there, because you're looking for just that kind of like home run trade right there. But for that, but most of the time it doesn't work out, so that's why it's always only right now one contract. I'm starting to get into it where what I'm starting doing is one contract on the initial, one contract at the 23.6, and then probably 2 contracts at the 50, 2 at the 88.6, 2 at the 1.146, and then either 1 or 2 down here at the 1.44. So I'll just have to see. The only question I have is, do I want to do one contract here at the 50, which I probably will do starting off. So 1, 1, 1, 2, 2, and then either 1 or 2 down here. So that's, as my account's growing, that's the goal, is to keep, since I have more margin now, I can put more contracts into it and then grow the account even faster. But anyways, so price went down, hit the 50, and so that moves the exit to down there, and then you can see that was kind of like, probably the stop was the 61.8. Let's put that on there real quick and see what that looks like. Oh, I need to put 0. What is that what I do? Yeah, 618. Here we go. Yeah, you see the obviously the support for this move, for whatever reason why, I don't know what it was, but was the 61.8. So that was definitely the support, as it never even closed below it, and then went up and hit that. And so yep, so that was that trade for the Nasdaq on Friday. Going into next week, there's really nothing at the Nasdaq either to look for. We need, for this trade set up, for the pitchfork trade to work, what we need price to go up here to break this high right there, and then once it does that, we need price to go lower, break that low, then we can put the pitchfork on it, depending on where this 3rd point is, and then if price goes up and closes above the green line, that would be our long there. So quite a little bit to go for Nasdaq, so nothing real. I'm not really saying that's going to happen, but that's really the only potential trade setup we have based upon the pitchfork trade. One thing I am doing this weekend is I'm going over a lot of charts to go over the inside pitchfork trade, because what I really want to see right here is the inside pitchfork trade. And how that works is you have points 1, points 2, and then points 3 and 4, which are right here, are within points 1 and 2. So if I just take this one right here, and I go 2 right there, 1 right there, 1 right there. Oh, never mind, I did it wrong. All right, so 1 right here and 2, and then there's points 3 and 4. So you see these 2 points, the last 2 points are within the first 2 points. So use the inside pitchfork. The exit is the red line up there, which is 5, and then the entry point is 1.5. And so I did do a lot of back testing research, and those seems to be the good entry points and maximum exit points for it. And it's the same type of thing where, oh, let me go back one, where when it breaks above the, or not breaks above, it closes above the blue line right there, or the teal line, you put the Fibonacci retracements and look for the retracement back, and then it goes to the standard retracement exit. But on this trade, that did not happen. Price zoomed all the way up there and hit it. So the biggest question I have regarding the inside pitchfork trade is it safe enough like the pitchfork trade where I can use it on a day trading chart within the regular Fibonacci retracement levels? Because let me go over here to this one right here. You can see the shift pitchfork trade, same type of thing, but what it is we're using I'm using an ABCD setup. So there's the A, there's the B, there's the C, and there's the D. So it goes down there and hits the 1.146 based upon from the A to B move, plus it closes below the blue line. And so the original exit's kind of like the other ones. It's this line down here, the other side, but then once it hits the Fibonacci levels, retrace it back up, it hits it. And so with the shift pitchfork, this one has the biggest movements against it. As you can see, this one has gone all the way up to 423.6 the other way, and now has finally, and these things can last for 30 days or longer, and this finally has, it looks like a real slow moving, churning, that looks pretty good right there, and that probably is about right there. Slow moving, churning channel right there, although it looks like it's trying to break up higher to the upside right here. So we'll see if that's just a fake out, because a lot of times if this trend channel is, and I'm just going on way too long here, but the trend channel, if you have one that's set up and it looks like a pretty set up trend channel, when price breaks out to one side, expect it to go the other way and break out lower to the other side of the trend channel. So if this is a true trend channel, it doesn't happen every time, but that's what a lot of time it does. If the trend is still intact, there'll be like a fake breakout right here, and then you'll get a big push down that breaks out to the bottom side. And if it does that, it'll be getting close to the ultimate exit, which is down here at the 23.6 level. And so I used to get in for this move at the 261.8 level right there. I changed it to the 423.6 just because I haven't seen price too often hit the 261.8 and stop and reverse, but I have seen it more often than the 423.6. It doesn't guarantee it's going to happen, because I have seen it go all the way up over here to around the 17.89%, which is 1,708.9. and sometimes even a slightly bit higher. So for long-term trade setups, it works great, but I would like to see if there's a way to get this to do more short-term. And so I don't think there is as of right now, so that's why I'm focusing on the inside pitchfork, just to make sure that we can do this on more of the day tradings and to where there's not a huge move against you like there is in the shift. But anyways, that's it for the weekend, or for the week. Have a good one, and talk to you later. Thanks, bye.